Hey there, welcome aboard. It's Walter here. We're going to talk about scientific trading. What do I mean by that? Well, let me show you the rules of science. If you've ever played a game like when you're a kid or even teaching kids a game, you know, it can be tricky because sometimes when kids don't understand the goal of the game or the strategy of the game, it's difficult for them to grasp, you know, what should I be doing here? And whenever you first started playing a game, you probably noticed the same thing, like, okay, what's going on here? You kind of have to grasp the rules. And so in science, we have two things here that are typically part of, and if you remember your research methods course or your experimental design course at university, if you took that in any of the sciences, then you will know that there are two errors. There's the type 1 error, and then there's the type 2. And they usually write it as Roman numerals for some reason. I think it makes it seem fancy if you do that. So, oh, by the way, before I forget, if you want to learn how to grow an account quickly, you'll get 3 methods at the on-demand training at nakedtradingclass.com. Go to nakedtradingclass.com if you haven't seen the free training there. Okay, type 1 error. What is a type 1 error? Type 1 error is when we in science, when we say, you know what, there's nothing here. Our hypothesis is that the drug is going to make people feel better, or that the manipulation, whatever we're doing, you do something like in psychology, you do a lot of manipulations and experimental experiments, is going to do something, and it doesn't. Okay, in trading terms, a type 1 error would be that we think that this trading signal is going to get us into good trades. We have an edge if we use it. So that would be a type 1 error. So there is an edge there, but we decide that there isn't. So that would be type 1. Type 2 is when we say there's no edge there. There's nothing going on. The drug doesn't work, or the trading system doesn't work. And in fact, it does. Okay. So let's talk about how you can work through these, because it's quite important, actually, I think, to grasp this, because it will show you what you need to work on with your system. So if you have a type 1 error, that's basically missed opportunity. It means that you're not enabling yourself to take trades when you should, really. So for example, let's say, actually this is a pretty good setup. I just paused the chart. When you fire up Forex Tester, which is when we're in here, it just kind of runs off these candles and you have to pause it. So I paused it right here. Let's back this up and just have a quick look at what's going on. All right, so let's say that I like the idea of buying here, and I want to follow my my rules though. And so this is not a bullish big shadow here. So in the Naked Forex book, I write about bullish big shadows and bearish big shadows, and that would be only the case here if this candle, this blue candle, actually had a lower low than this candle. It doesn't. Now I know the body engulfs the prior candle, but that's not really good enough when we're talking about big shadows. So this would not qualify as a big shadow. It would be an engulfing candle, because people that look at the bodies of the candle and not the wicks. But let's say I said, you know what, I'm really upset that this isn't an ideal setup. I'm going to take it anyway. So if I put my buy stop up here and I go, you know what, it looks really good. Like the market's kind of consolidated. It's pulled back here. Looks like it's going to explode upward. So I'm going to put my stop loss down here below the red candle, and I'm going to see if the market actually goes higher. Well, it did. It just barely clicked me in, and now it's gone down, and so I get stopped out. So that was a type 2 error. I thought that there was a viable signal there, that there was something working for me. It was going to work even though it didn't fit my rules exactly, and there was nothing. There was nothing. So the type 2 error is when you say something's happening and there isn't. Type 1 is when you say nothing's going on and there is. So when you're trading, you pretty much have to choose which one you're going to accept. So if you trade a lot and trade often, take a lot of signals, and you just kind of let the exit strategy do the work for you, so like a trailing exit or a really aggressive exit, like a 10R or 5R exit, something like that. You could do that, but if you do that, you have to know that really what you're banking on is you're banking on your exit to gather up the profits for you. And so you're not putting a whole lot of emphasis on your entry. If, however, you really want to fine-tune your entry, which is normally what we do when we first start trading, when we're getting into trading, all of our focus is on the entry. If that's the case, then you just have to be wary and make sure that you're not making any type 2 errors. If everything you're trying to do is focus on avoiding type 1, which is, well, if you're trying to avoid type 1 errors, then you're going to take as many trades as you can. So you're going to have to focus on the exit strategy and your risk management rules making money for you. But if you really want to get your entries right and you don't mind not taking that many trades, then you're really focusing on type 2. You don't want to make the mistake of saying that there is a trade, a viable trade, there's an edge here, and there isn't. So it really depends on who you are. Now, I would say one thing to be wary of, this is kind of tricky, but a lot of traders, they make this mistake. It's pretty common. If you think that you have a problem of over trading, then you should definitely get a trading accountability partner, for one thing, someone that you speak to every week about your trading. And number 2 is you'd want to trade a system that has very well-defined rules so that you are not able to push the boundaries and get outside the rules. And give yourself a number of bullets. Like you say, okay, if I overtrade, I know that I should only take about 10 trades a week, and I've been taking 25 on average. You give yourself a certain number of bullets. So every day I get 5 bullets, max, 5 trades, that's it. And if I run through my 5 trades today and my 5 trades tomorrow, then the rest of the week I have to stop. So you can do something like that. That's a thing to do too. Or you can use that on the weekend, for example, you're going to talk to your trading accountability partner. If you know that's coming up, that will also shape your behavior. That's called the Hawthorne effect, where you know that people are watching you or paying attention to what you're doing. That will shift your behavior as well. So I hope that this helps, and I hope that you've kind of figured out which one you're more interested in, the type 1 error, the type 2 error, and how that's going to direct your trading. I wish you happy trading. I hope that you go to nakedtradingclass.com to get the 3 ways to grow your account fast, and I'll see you in another video. Take care. Bye.